If you're still sitting on the fence when it comes to property investing, that's completely cool. With so many different asset classes out there, like businesses, like stocks, like bonds, like crypto, and property, and then within property there's developing, there's buying and holding, there's buying for cash flow, there's buying for capital growth. It can be super confusing, which is why in today's video I'm going to talk about some of the main reasons I've invested in property, and you can take that with a grain of salt and do with it what you... My name's Ben Everingham and I'm the director here at Pumped on Property. So these are some of the reasons that I like investing in property personally. Now the first one is when I look at the history of the stock market and I look at the history of the property markets in Australia, in America and throughout Europe, what I've seen is that long-term high quality assets over the last 100 years have consistently increased in value at a rate in both the stock market and the property market above what I can save or the average inflation on the average job. So when it comes to property, if you're interested in learning a bit more about your history, there's a great book on the Australian market by John Lindeman called Mastering the Australian Housing Market, which talks a little bit about our history. And one of the things that I picked up in that book is that over the last 100 years, property prices in Australia have gone up by an average of over 10% per annum. Now, I don't see that happening into the future because property prices are expensive today, but even if we get 40% of that, I'll be really, really happy long term. Now, if you're interested in going deeper than that, Phil Anderson wrote a great book called The Secret Life of Real Estate and Banking, where he looks at 250 years of American property cycles, and then Fred Harrison wrote a book called The Power in the Land, which looks at 300 years of UK or European property prices and the booms and busts associated with them. So what I like about the history is that the long-term performance, although obviously there's good times and bad times where prices go up and down, has been really, really solid. Now, the second thing for me personally, because I'm such a low risk personality type and I don't like risk in my investments, property has a lot less volatility than something like cryptocurrency. It requires a lot less time than starting a business and a lot less pressure, and it fluctuates a lot less than shares or stocks do. So one of the things I like about Australian property in particular is that about 60 to 70% of the properties owned in Australia, depending on whose data you're looking at, are actually mums and dads that are buying them not to speculate and not to invest, but buying them to put themselves in. So this is my home up here on the Sunshine Coast. I certainly didn't buy this home to make long-term gains. I bought this home because I have 3 young kids, they like swimming in the pool, and it's got a nice big backyard, which I'm in at the moment. So with so many Australians doing that, it means that only around 30 to 35% of the market is volatile, which means, you know, they're looking to buy and sell regularly, and even most investors, you know, aren't buying and selling regularly either. I also really like the fact that it is a little bit difficult to sell property. It's not something that I can see a correction coming in the morning and be out of the market in the afternoon like stocks. It's more of a longer term game. So I've got to market the property, I've got to get it online, I've got to find the right real estate agent, I've got to have open homes to sell the property, and then I've got to ultimately find a buyer that can finance it. And that means that it's more difficult for everybody to come rushing into the market at the same time. And if they did, most people's properties would sit there unsold because there's so much choice in the marketplace. So as an investor who's got a longer term approach and really doesn't like risk, I like the fact that property doesn't have that volatility. Now, a third thing that a lot of people don't talk about when it comes to property is how good the cash flow can be. Now, obviously this depends on your market and the type of product that you want to buy. Generally, the rule with Australian property is the more expensive the property, the lower the cash flow, but that isn't always the case. So in Sydney and Melbourne right now, cash flow obviously doesn't look great because prices rose very quickly over the last 5 or 6 years and are now sort of peeling back a little bit, which is completely normal. And therefore the prices increased but the cash flow didn't so much. At some point in the future those will start to rebalance a little bit better, where other markets like Brisbane, for example, you can buy really high quality homes with really nice, or you can build nice granny flats on them and therefore get 2 2 incomes from the one property, meaning that your cash flow's a lot better. Now, when I'm looking to buy a property for myself, if it's your standard single income home, then I really want about a 4.5% to 5.5% rent return. And then if I'm doing something like dual income, I really want to be aiming for somewhere between 6 and 7% rent return. Now, one of the benefits when it comes to cash flow, sorry for the location change, it just got a little bit dark here as the sun's rose over my backyard, is really the fact that, you know, if you buy the right suburb at the right time and the rental vacancy rates are really low, that cash flow is quite secure. So I like to target suburbs with a vacancy rate below 2% personally, which is a chronically undersupplied suburb. And as long as there's not heaps of brand new product coming on over the next few years, I can generally find a tenant, depending on the time of the year, within sort of 1 to 3 weeks. Now, if I've got 2 incomes coming in from the one property, I generally, from my experiences over the last 9 years as an investor, have at least 1 income stream coming out of that property all the way throughout the year. It's very rare for both tenants to leave at the same time, and on my properties to get long-term periods of vacancy. Now, what I like about property is that if you were to own that property completely outright, for example, let's say you went out there and you bought $1 million property and it rented for $1,000 a week, then that $1,000 a week, if you own the property outright, comes in whether you get out of bed or don't get out of bed that day, whether you work that year or don't work that year, and it becomes a passive income stream for life, which I think a lot of people undervalue. But think about it, the sooner you can get a passive income coming in for life, the sooner you get higher quality choices in your life to do the things that you want to do. Maybe you want to start a business or travel more, or drop your kids at school, or take 1 day off your job per week and actually spend that extra time with your partner and your family. Maybe you want to volunteer your time or work a second job or educate yourself or retrain. And when you have a passive income coming in from whatever asset class you choose that's right for you, it can really take some of that pressure to continue to work a job that you may or may not like, or spend your time in a way that you may or may not like. So cash flow is super important to me as an investor. When I was just getting started buying in Sydney in 2011, it wasn't really the top of my radar because I didn't understand it. But these days, anything that I buy really has to have great cash flow so that it covers itself week to week during the holding period. And then when I do own it outright in the future, or hope to own it outright in the future, it provides me with that recurring income stream for life. Now, the fourth thing that I wanted to touch on is this cool ability in property to actually buy something either below market value or at the right time, or with some upside. So I'm not talking about crazy developments that are really risky and hard for you to execute unless you have heaps of money. I'm just talking about buying a home, maybe it's a 3-bedroom, 1-bathroom home, and then you do a bit of a cosmetic renovation, you know, paints, carpets, tidy up the yard, new kitchen, new bathroom, and then maybe, you know, you add a bathroom or you add a bedroom to it in the future, and that can be a really nice way of adding value or manufacturing value to a property. Now, there's people out there like Cherie Barber that if you're really interested in renovating, she offers courses in it. And then there's plenty of videos like mine online where I talk about this stuff as well. Now, the house that was behind me before is a house that my wife and I bought in 2017. And we spent 5 months renovating it in 2018. Luckily, my wife's an interior designer and has a really good background in this sort of stuff. And we slowly renovated it over that period of time. Well, not slowly, we actually smashed it. And we've just moved back in, and you know, the value of the property therefore is worth more than what we bought it for now. So I think buying properties with the potential to add value, now you can do that through a reno, you can do that through bedrooms or bathrooms, you could do it through a subdivision or creating a duplex, you could do that through actually buying a piece of land below market value and adding value to it. You could do that just from buying at the right time. You know, manufacturing value doesn't have to be active if you understand the market well enough. You know, imagine you had been able to buy a couple of properties in Sydney or Melbourne in 2012 and 13, and all you did was hold them until 2017 and sell out. You know, that would have been a huge jump, or in terms of the capital that you would have made over that period of time. And similarly, looking into the future over the next 7 years, I believe there's really good opportunity in some of Australia's markets once you actually wrap your head around them and realise that, unfortunately for now, Sydney and Melbourne are done, but other marketplaces look interesting. So the fourth thing that I wanted to talk about is sort of in line with the history, and that is the fifth thing is long-term capital growth. Now, you know, it's really nice to have cash flow, it's really nice to add some value to the property, but the number one thing that has helped people become wealthy or to create income streams or to pay off their own homes over time has been, you know, buying a property at, you know, $400,000 in Sydney 10 years ago, for example, and then now having the value of that property being worth $800,000. Now, it doesn't always happen that easily or that quickly. Sometimes it can take a lot longer than that to get the value of the property up, but those long-term capital gains are something that you don't have to work for. It kind of happens while you're awake, it happens while you're asleep. Some years it can be really sharp. Some years you can lose value on your property, but if you have a long-term approach of 15, 20, 30 years, then the averages based on the history have slowly worked out in the favour of people that have bought properties rather than sat on the fence. Now, the next thing that I wanted to talk, which is the sixth thing, is timing. Anybody that bought in 2012 in Sydney or Melbourne understands the value of timing, because what you've seen is you bought the market at the right time. Up until that point, Sydney had been almost flat for the 9 years before it, growing by less than 1% per annum. So in terms of timing for that 9 years before 2012, if that was you and you owned it, you probably thought buying investment property in Sydney was a dud. And then all of a sudden, if you did hold through that period of 2012 to 2017, you saw your prices increase by 60 to 100%. And that's what I'm talking about with timing. Now, if you understand your history, you understand and can begin to understand which markets of Australia are set to grow over the next 5 years, which are set to decline, and which markets should sit flat. And, you know, based on my analysis of the Australian marketplace, again, Sydney and Melbourne don't look fantastic from a timing perspective because they went up so rapidly. But other markets, you know, for example, Perth has been going backwards for 7 years now. Other markets like Brisbane, according to Core Logic, are now more affordable to buy in 2019 than they were in 2008 when you factor in inflation. So from a timing perspective, understanding that Brisbane's long-term performance has been good means that you can start to use that to your advantage, and if you've got the right plan and strategy in place, take advantage of market conditions, which is certainly a buyer's market in Brisbane right now. Now, this isn't something that I'm a huge fan of, but I will mention it. Is tax benefits associated with property, particularly brand new properties or brand new granny flats. Now, Labor said if they get in 2019 that negative gearing and capital gains tax might be something they look at. To me, like I said, it's a very low priority in terms of why I invest in property. If I get some depreciation from existing or old properties now or in the future, it's sort of neither here nor there. But when I do build a brand new property or a brand new granny flat, Labor has said that all brand new properties, based on what they're talking about in 2017 and 18, will still get that full benefit of a full depreciation schedule. Now, for me, for example, I built a home. Actually, I've built 6 places in the last 6 years. Building for me has become sort of a bit of a passion and a way that I like to orientate my investment properties. But I built a home worth $300,000 or $350,000 in 2016, and then I moved out of that home in 2017, and after I moved out and it became an investment property, I got a tax depreciation specialist from BMT and my accountant to put together a report. Now in 2018, a full year after I'd been out of the property, I got a $10,000 tax return on that one property, or tax benefit just from the depreciation. So if you haven't already set up depreciation schedule on your existing property now, or you're planning on buying a property in the future, make sure you talk to your accountant and your tax depreciation specialist and see if there's anything that they can help you save. I'm certainly not a financial advisor, an accountant or a solicitor and can't talk about it, but from my experiences based on my portfolio, it's been really, really helpful in terms of getting some tax benefits associated with the properties I own. Now, the last thing I wanted to touch on, which I don't know which number I'm up to now, I think it's 8, is the future of the Australian marketplace and the future of Australia demographically as a country. Now, if you were to look at the Australian Bureau of Statistics 2050 report, which actually talks about what their plan is for Australia, or even further into the future than that, the Australian Bureau of Statistics or the Australian government is expecting 55 to 60 million people living here in my lifetime alone. Now just think about that for a second. We're at 25 million people now. Our population is literally expected to double over the course of my lifetime, possibly even go further than that. Last year and the year before, we got about 700,000 new people either being born in Australia or moving to Australia from somewhere else in the world. And that is one of the benefits that Australia has as opposed to other countries around the world where they're just so big and so full now, particularly developing countries, that they can't support this population growth that Australia is. So in 2019, the Australian Bureau of Statistics is predicting another 330 to 370,000 people to be added to the Australian population. And I can tell you this, like, while the Australian dream for some Australians has been left in terms of home ownership because they believe it's too expensive right now, these people coming into Australia that I work with every single day, from India, from China, from America, from Europe, want that Australian dream. And when you put some of the Australian markets into perspective for these people, they are dirt cheap compared to the countries that they're coming from. So I'm not saying that that's a buy signal for Sydney and Melbourne, which I believe are still completely overpriced right now, and unfortunately still will drop by 6 to 10, maybe even a bit more percent this year. But for other markets in Australia that everyone has been forgetting about for 11 years, like Brisbane, it could be a really interesting opportunity to start wrapping your head around it. So that's me for today. I've talked about history, I've talked about the security in long-term investing. Short-term, you have no idea what's going to happen. We don't know what's going to happen tomorrow or this year or next year, but if it's a long-term 20-year buy and hold strategy for the right product, then you can do very, very well from property. Based on the past, you know, maybe for the next 20 years nothing will happen, but you know, with the population growth rates, the income growth rates, the fact that so many Australians are paying debt off their properties and buy them for home ownership, I am still excited and confident that I will make something out of the next 20 years from Australian property. I also talked about buying for cash flow, which I think is very, very important right now. Manufacturing value and timing, as well as the tax benefits and the future of the Australian market. So for those of you thinking about buying in the next 12 to 24 months, I'd love to offer you a one-on-one strategy session where either myself or my brother Simon will sit down with you and look at where you are right now, what your plan is for your future, what's holding you back from actually moving into the marketplace at the moment, and you know, we'll talk about the market and what your next steps in terms of your next property could look like. So if you want that, that's a completely complimentary strategy session. You can book it over at www.pumpedonproperty.com. And if you haven't already done so, please subscribe to this YouTube channel. Please check out our podcast, The Pumped on Property Show. And I just wish you all the best for the next couple of years, because this isn't a time to be silly. It's not a time to go out there and take on huge amounts of risk or debt. Unless you have a very clear strategy in place that's been put together with a financial advisor and it's a safe strategy based on your position. You know, what's really important right now is to acknowledge there are some great buying opportunities in some markets around Australia. There's some other markets that you need to avoid. And just as always, tread cautiously as you move forward with your situation. Again, I'm not a financial advisor, an accountant, or a solicitor. So go talk to those people that are, and you know, get the right plan in place. I wish you all the best and can't wait to talk to you this year.